My name is Tomy Shaw, and here on today's channel, Day-to-Day Finance, what I'll be talking about is assets. Which is best for you? And I'll go into trying to give some details on why assets are essential to get financial freedom, or you want to grow your wealth, or you want to have financial independence. So let's start with the first thing. What are assets? Assets generate either income or cash flow, and or they can also generate capital gains. This capital gains is when the value of what you buy increases in value. It does not mean because you own assets that they will increase in value. You need to study every sector and you need to go with the trend. You need to learn what appreciates in value and what goes down. So that has to do with the person to study every market. Assets usually increase your ability to become rich because the reason why is because they're independent from you and usually from your time. Because when you own shares from a business that you're not running, you don't have to manage the company. You don't have to use your time to make money. So the more assets that you own, the more potential you have to become rich because it is independent from you. Like bonds, it doesn't matter if you're working or you're not working. Either way, the person that owes you money in general will have to pay you back and will have to pay coupons. So which asset is better for you? Like it really depends on what you're looking for. Like what do you need? Are you a person that's making $200,000 a year and you don't need more money? Or are you somebody with a low income and wants to make more money? So depending on which type of asset is best for you, it will depend on the situation that you're in. Like if you're somebody that needs money right now, you want to go for something that goes less up in value but generates cash flow or revenues every month. And it also depends on your risk. Like, are you risk averse? Are you somebody that's very scared of losing its capital or investment? If you're very scared, you're going to have to go into, or if you're not able to lose any money, you're going to have to go into something safe. If your income is low, it depends. Like I was just saying, since cash flow will increase your ability to reinvest and grow faster. Like I remember at first when I was investing in real estate, what I wanted was the ability to make some cash flow so I can pay down my debt faster and that I could reinvest by buying more real estate because I wanted financial freedom. Well, if you have a lot of money and what you want is reduce the impact of taxes, you're going to go for capital gains because you don't have to pay taxes until you sell. Like say it appreciates $100, you bought it for $100 and it goes up to $200, you don't have to pay any taxes until you sell that asset. The day you sell that asset is the day you're going to have to pay taxes. Okay, I'm not saying how much taxes you're going to pay because it depends on your salary. It depends on so many things. Like you have to follow the law, the government law. They already have all that information. A good accountant will be able to help you in the right direction. So the types of assets, there's tangible assets and intangible assets. Tangible assets can be cash, can be land, can be machinery, building, real estate, industrial, and commercial. It could be your car. It could be anything that you use to generate income or for your business. If it's for the operation of your business, it's an asset. And in intangible assets, there's many more intangible, but there's brands, patents, and all these gives you the ability to make more money because when we think of Apple, they have a strong brand. The first thing I say when I'm talking about smartphone, you're thinking of Apple. That is brand. Now, a balance sheet. This is a balance sheet for a business. This is the left side only. It incorporates all the assets. As you can see, cash is an asset. Short-term investments are assets. The receivables that you're supposed to get from your business is assets. Inventory, prepaid expense, other current assets. These are all assets. These are short-term assets, and these are the long-term assets: property, plant, equipment, and goodwill, intangible. So, like I said, there are many types of assets, and the assets can be this. For this example, it is for Cleveland Cliff, but your assets for yourselves are the same thing. Like every time it generates more money than it costs, it becomes an asset to the person that owns it. Like if land appreciates 8% a year, I don't know how much land is appreciating in your area, but you need to study that. But there's better chances that it will increase in value because they're not making more land. Land is becoming rarer and rarer every year, so it becomes something that usually increases in value. I'm not saying it's increasing in value, but it tends to increase in value. Assets and which one is the best for you? Okay, which asset is the best for you? Okay, I have an example here. Say you make 50K a year and that you have 20K saved up, $20,000 saved. You find that you don't make enough money per year and you want to find a way to make extra money. You are good with managing money, people, and have a moderate level for risk. Which strategy would be best for you? Land, like in this case, it would be real estate because real estate could be a great fit since cash flow is positive. Let's say it's a cash flow of $1,000, location is great, and you buy it 10% below market. This is excellent for this person. Now let's look at land. Would land be a good example? No, it wouldn't be because the person is looking to make extra money and land appreciates in value. It's good for somebody that's making a high income and just wants to have an investment for the long term. Assets. Car can become an asset, like I was saying a while ago. If you rent it out for weekends and you use it for your business, it can become an asset. Gold and silver can be a hard asset if it appreciates in value, but gold will not produce income. Like the problem with gold, it appreciates, but it does not give income. Business are assets when you own shares. Stocks and bonds are assets. They can be a safe and risky investment. It depends on the financial situation of the business. If the business is having a hard time, the stocks and bonds for that business is going to become risky. So hopefully this makes sense. My goal was to show all the assets that you can buy to give you financial freedom. When you think about buying assets, your creativity can become an asset because if you're somebody that's very creative and you're good at creating systems, this will become an asset. Your mind is an asset. The more you invest in it, the higher returns it can profit in the long term. So yeah, exactly. My name is Tomy Shaw. So please subscribe, please share my information, and leave comments down below on how I can help you and give you better content.